For decades, I think, even for those of us watching closely, China's economic story has seemed like one of just relentless visible growth. The gleaming skyscrapers, the packed shopping malls, this huge emerging middle class. We've seen these cities just transform at unbelievable speed, right? Pulling millions into what look like ever-increasing wealth. But what if the biggest economic shift isn't that visible growth we all see? What if it's something hidden, like an invisible soaring mountain of household debt, quietly reshaping millions of lives? So today, that's what we're diving into, this hidden landscape. We want to unpack why so many Chinese citizens are, frankly, finding themselves drowning in debt. How did this situation build up so quietly? And, what does this surge in debt really mean? Not just for individuals, but for China's whole trajectory. It's a story of ambition, yeah, but also unexpected shocks and some really profound personal struggles.
And you're absolutely right to highlight the scale. It's something that I think most people, whether they're inside China or looking from the outside, maybe don't fully appreciate just how widespread this has become. It really permeates the lives of a significant slice of the population now in ways that might be quite surprising.
Okay, so let's get into that, this soaring mountain of debt, as I called it.
Yeah.
Can you give us a sense of the numbers? How much has it actually grown?
Well, the speed and the scale here are really quite striking. Household debt in China it's absolutely skyrocketed. If you go back to, say, 2006, it was less than 11% of GDP. Pretty low.
Right.
Today. It's soared to over 60%. 60% of GDP.
Huh.
And just to give that some context, that puts China alarmingly close to the kind of levels you see in much richer, more developed economies. And this isn't just an abstract number. If you look at research from Gavical Dragonomics, they estimate somewhere between 25 and 34 million people in China might now be in outright default on their loans.
25 to 34 million people just in default. That's enormous on its own. But what about people who are maybe just falling behind, not quite in default yet?
Right. So if we widen the lens a bit to include those who are simply in arrears, behind on payments, but not technically defaulted, that total figure leaps. We're talking an estimated 61 million to 83 million people.
Good grief.
Yeah. That's roughly 5 to 7% of the entire population aged 15 and older. And what's really stark here is that for both groups, the defaulted and the ones in arrears, these numbers are basically double what they were just 5 years ago.
Double in 5 years.
Exactly. So this isn't some minor issue affecting a few people. It's a rapidly growing challenge.
So, okay, what does this mean for the bigger picture then? I mean, is China's financial system about to collapse? Or is it something else?
Well, most analysts don't see it as an imminent threat to overall financial stability. China still has, for instance, a very high national savings rate. But it's clearly weighing incredibly heavily on middle-class families, on their minds, on their wallets. It's making them cautious, holding back on spending. And maybe more fundamentally, it seems to be undermining that deep-seated belief in just, ever-rising prosperity, that feeling that things will always get better.
And that belief is crucial, isn't it? For the Communist Party's legitimacy, that sense of forward momentum is vital.
Absolutely. It's seen as vital for stability. Which leads to a kind of paradox, doesn't it?
How so?
Well, as you mentioned, Chinese households generally do have a significant buffer. Savings relative to disposable income were nearly 32% in 2023, according to JP Morgan.
32%. That sounds huge compared to, say, the U.S.
Oh, much higher. The U.S. rate was less than 3% just before the 2007 crisis. So yeah, that 32% figure is striking. It looks like a massive safety net. So the obvious question becomes, if they have these savings, what exactly pushed so many people into this difficult financial spot and seemingly so quickly?
That's the key question, isn't it? Is it just bad choices? Or is there something about those savings? Maybe they weren't as accessible as they looked, or specific shocks that overwhelmed that buffer.
I think that's where it gets really insightful. This debt crisis sort of exposes the tricky side of China's economic miracle. A lot of that household wealth, those savings, they're often tied up in assets that aren't easy to sell quickly, like property.
Right, illiquid.
Exactly. Or it's money saved out of caution because the social safety net isn't as strong as elsewhere. So when income suddenly dried up, think about the zero COVID lockdowns or when property values started to plummet.
Yeah, I see.
That liquid cash buffer, the money you can actually spend, maybe just wasn't enough to cover these huge ongoing payments like mortgages or business loans. And that pushed people into default surprisingly fast. And for many, many people, that journey into debt really started with what felt like the safest bet imaginable, property.
That makes perfect sense. For years, borrowing to buy a house in China felt like a guaranteed win, didn't it? Especially when the economy was booming, jobs felt secure. It was just assumed prices would only go up. A one-way bet, as you called it earlier.
Precisely. That was the mentality. And it drove a massive amount of borrowing. Just last year, borrowing for housing made up something like 65% of all household loans if you exclude loans taken out for business purposes. 65%.
Huge.
But then, of course, came the shocks. The zero COVID lockdowns hit businesses and incomes hard starting in 2020. And then almost immediately after the property market started its downturn in 2021, that's when those one-way bets started looking very risky indeed. And the very system that had fueled wealth through easy credit and rising property values began, ironically, to trap millions.
And the consequences are pretty stark. You can see it in the data.
Yeah.
According to the China Index Academy, there were 366,000 foreclosed residential properties listed for auction last year. Now, apparently that was only a slight increase from the year before, but it suggests the underlying problem, the number of people actually failing to pay their mortgages, could be growing much faster under the surface.
Yes, the auction numbers might not tell the whole story.
So how are the lenders coping, especially with potentially so many defaults happening or looming?
That's a really important question, especially given the scale we're talking about. Most mortgages in China are actually issued by the big government-owned banks, and they tend to be quite cautious about aggressive foreclosures. Partly, it's fear of sparking public anger, protests even.
Understandable.
And there's a practical issue, too. In today's weak property market, auctioning off a foreclosed home might not even cover the outstanding mortgage debt. So it's tricky for them. However, it's worth noting the online lenders, they provide a smaller slice of mortgages, but they're growing. They can be much, much tougher in chasing repayment.
Right, the dynamic is different. And it's not just property debt, is it? We're also seeing debt pile up from people starting businesses or even just from personal spending. I was reading about Miss Bai in Hangzhou. She took out millions of yuan in personal loans to fund her education business. Apparently, many Chinese entrepreneurs do this, use personal loans, sometimes with personal guarantees, putting their whole family's finances on the line.
Yes, Miss Baya's story is a really powerful illustration of how things can go wrong very fast. Her business was apparently doing really well, generating, 100 to 200 million yuan in annual revenue at its peak.
Wow, so successful then.
Very successful. But then came the double whammy, the impact of COVID-19 and a sudden government crackdown on the private tutoring industry, which was her main business.
The crackdown on cramming classes.
Exactly. And that combination just caused her business to collapse completely. She ended up having to sell her house, her car, everything, just to try and pay off this huge debt load.
It's devastating. And then you have stories like Lily, a millennial in Shanghai. She owed, I think it was 30,000 yuan to online lenders simply because her employer, a software company, stopped paying wages.
Right. And her story, even though the amount seems smaller compared to Mrs. Bai, it shows how even these unexpected income shocks can unravel finances quickly, especially when those aggressive online lenders get involved.
Yeah. And her situation led to this really strange phenomenon, didn't it? This thing called debt IP.
Ah, yes. Debt IP. It's fascinating and quite grim. People basically turn their stories of financial ruin into content online, almost like becoming influencers of debt.
So Lily started describing her struggles on social media.
Exactly, making short videos about being a debtor. And some of these debt IP accounts have gained hundreds of thousands of followers. There's even this weird sort of competition, people comparing who has the most debt.
Like a bizarre reality show. It really highlights the desperation, I suppose.
It does. And zooming out from these individual stories, the broader societal cost of all this debt is really profound. It goes way beyond just the money. You have to remember, dealing with personal debt, especially default, is still deeply shameful in China. It's not something people talk about openly. It's often kept very private.
Right.
And for many debtors, the experience involves these terrifying encounters with what are called Cuigou, literally pressure dogs.
Pressure dogs. Aggressive debt collectors, basically.
Incredibly aggressive, often operating well outside what we'd consider normal or even legal collection practices.
And Mrs. Bai's story brought this out clearly too, didn't it? The difference between how the banks and the online lenders operated.
Yes, she found dealing with the big state banks, which the government had actually urged to be a bit lenient during the pandemic, was relatively okay. They even apparently waived quite a bit of interest for her.
So the banks showed some flexibility.
They did. But the really difficult part, she said, was dealing with those pressure dogs, hired by the online lenders she'd borrowed from for personal use. They would call her relentlessly, call her friends, her relatives, often using different phone numbers so she couldn't easily block them. Just a constant barrage of harassment.
That sounds incredibly stressful.
It's psychological warfare. And what seemed particularly devastating in Mrs. Bai's case was the harassment targeting her elderly parents. She said, and this really struck me, in China, we generally don't tell our parents about bad news, so they were very, very affected.
Oh, that's heartbreaking, the cultural pressure there.
Immense. The emotional toll on her was enormous. She became severely depressed, even thought about suicide, and ultimately her husband divorced her. It just shows the ripple effects, the human cost.
And it didn't stop at phone calls, did it? She was put on a social credit blacklist.
That's right. Part of China's broader system for monitoring trustworthiness. Being blacklisted like that has serious real-world consequences. She couldn't fly, couldn't use high-speed trains, couldn't even stay in nice hotels. It's a severe form of what people in online debtor groups call social death.
Social death. Shizi, I think, is the term.
Yes, shizi. It signifies this profound loss of social standing, freedom, connection. It comes up a lot in these online support groups. Cuigou, a researcher at the University of Turku in Finland, has studied one such group, the Debtors Alliance, on the Douban platform. It started in 2019, now has over 60,000 members.
60,000 members, just one group.
Just one group.
Right.
And Dr. Guo notes that shizi is a common topic. People specifically talk about the destruction of relationships caused by what they call contact bombing, that relentless harassment from collectors that Mrs. Bai experienced. It shatters social ties.
So, faced with all this distress, these pressure dogs, the social death, millions struggling, how is the Chinese government actually responding? Are they stepping in?
Well, they've certainly tried to show some level of sympathy, or at least acknowledge there's a problem. Last year, for instance, they brought in some new regulations. These regulations officially ban debt collection agencies from doing things like threatening violence, using abusive language, or calling people at unreasonable hours, like late at night. They also reminded lenders about protecting personal data.
Okay, so regulations exist, but do they actually work?
That's the big question, isn't it? Enforcement. Data privacy rules in China are often, well, let's say loosely enforced in practice. And if you look at the complaints still pouring onto those online debtor forums, it suggests that despite the new rules, not much has actually changed on the ground. The collectors often continue with the threatening, intrusive behavior.
So why aren't they doing more or moving faster if the problem is this widespread and causing so much distress?
It's a critical point. One obvious reform, something common in many developed economies that could provide significant relief, is a proper personal bankruptcy law.
Right, a system that protects debtors from complete destitution gives them a path forward.
Exactly. And the lack of such a comprehensive law has arguably fueled the growth of those predatory online loan sharks we talked about, because people in default have so few options.
Has there been any movement on that front?
Well, Shenzhen, the tech hub, became the first city to trial a personal bankruptcy law for individuals back in 2021.
Okay, a pilot program.
Yes, but it seems they're using it with extreme caution. By late 2024, over 2,700 people had applied, but the courts had only actually accepted about 10% of those cases.
Only 10% accepted. That's very low.
Extremely low. And while a few other cities are apparently experimenting with similar schemes, the central government just doesn't seem to be in any rush to roll out a national law. There's definitely a reluctance there.
And what's behind that reluctance, do you think?
Well, a key factor seems to be that creditors in many of these cases are large state-owned firms.
State banks, state enterprises.
Exactly. And officials seem worried that introducing a broad personal bankruptcy law might send the wrong signal. Like, it could be seen as tolerating reckless borrowing or maybe encouraging speculative behavior.
So it's a balancing act for them, trying to manage the social fallout without undermining financial discipline, especially when state companies are owed money.
Precisely. It's a very tricky balance between supporting citizens in distress and upholding what they view as financial prudence and stability, particularly for the state sector.
So wrapping this up, what does this all really mean for you, our listener? We've peeled back the layers on this burgeoning household debt crisis in China. It goes from property market downturns and failed businesses all the way down to these really brutal personal struggles with aggressive debt collectors and the immense toll and financial ruin. It really is an invisible change affecting tens of millions.
And zooming out again, I think it really highlights this incredibly delicate balance China is trying to strike, between pushing for rapid economic growth, fulfilling individual aspirations for a better life, and maintaining social stability. The stories we've heard, they reveal a huge challenge for the government. How do you manage financial risk effectively without completely choking off economic dynamism? How do you support struggling citizens without looking like you're condoning risky financial behavior?
It definitely leaves you with a lot to think about. As China moves forward, how will the government navigate this? Balancing the numbers, the financial stability, with the very real human cost of this debt. And what could this growing crisis, simmering beneath the surface of all that visible prosperity, ultimately mean for the hopes and dreams of ordinary Chinese people? It's a stark reminder, isn't it, that even in times of seemingly unstoppable growth, really profound social challenges can bubble up from unexpected places.